One.
1140 The Fan.
Talkin' money, talkin' money.
Well, alrighty then. We're back to Talkin' Money with Jeff Tarbell.
Right. How you doing? There we go. Our text machine was running behind a little bit there. Yeah, 339-1140, 1-800-920-1140, or you can text me at 441140. Bill Gates testified in a $1 billion antitrust lawsuit filed by the former owners of WordPerfect. Anybody used to use WordPerfect? That's all I used was WordPerfect. And I actually probably haven't even thought of that name in, probably since 2000, whenever they decided to sell. Novell says it was forced to sell WordPerfect for a $1.2 billion loss because of some antitrust, problems with Windows 95. Bill Gates said Novell just couldn't deliver a Windows 95 compatible program in time for rollout. So, interesting. We'll see how that shakes out. Does it really affect Bill Gates at all anymore? Probably not, but it could affect Microsoft. So, and now everybody just uses Word, right? I'm not even sure what the other word processing software would be anymore, unless you're on Apple, which I am, and I don't know how to use yet. So, anyway, we got a lot of couple phone lines open if you want to jump in at 339-1140. Let me see here off the text line. WordPerfect. Jeff, do you think school loans are bringing the economy down? How big a danger is starting all these students out in the hole when they do or don't graduate? That's a good question. And some people believe that the next, home mortgages were number one. Commercial mortgages, so far commercial mortgages haven't. Everybody keeps saying that that's going to be the next really big meltdown, and that was projected to have already started, and certainly you're seeing some of it. But the commercial mortgages themselves are a little different animal, right? There's a lot of personal guarantees involved with those, which means if you're going to have to write a huge check, maybe you're more apt to hold on to the building, struggle it out a little bit on a monthly basis. Not as much federal government guarantee in them, although the SBA certainly guarantees a good portion of them. But we haven't seen, quite the meltdown in the commercial loan business. We've certainly seen it in the market values of commercial properties, but we haven't seen it kind of trickle all the way through yet. And if you do, you don't, we're just not hearing about it as much as probably is going on. So, but student loans are thought to be kind of the next little wave of meltdowns. Obviously, smaller dollar amounts, big dollar amount if it's you who has to pay back the $50,000 or $60,000 loan, but smaller national dollar loan amounts. Do I think school loans are bringing the economy down? No. Do I think it hurts the first-time worker who's got saddled with all this debt? Yes. But what are your options? We talked about that a couple weeks ago. Maybe it was last week or 2 weeks ago. The value, kind of the average value of getting an education, the cost versus the return. It was almost $1 million in lifetime income to an individual who got just a bachelor's degree over a high school education. So there's a cost, benefit analysis to everything. Yeah, it hurts to be saddled with debt, and that's going to, drag down some people initially for sure. It's funny that text comes in because here's a right out of today's Wall Street Journal speaking about whether you should get an education or not. In the midst of 9% plus unemployment, there are many industries right now who cannot find qualified employees. And primarily they are not college education requirement jobs. They are trade skill jobs, welding, electricians, diesel engines, people, drilling rig workers, these kind of places. A big article today in the, a full-page article in the Wall Street Journal today, just talking about the troubles that Union Pacific Railroad is having, trying to find people that are skilled tradesmen and women, people who can come out and, and provide them with good skilled workers. And it's funny because the article is from the perspective of a recruiter who's coming to a job fair and is inviting people to come there and is sitting there disappointed because they didn't show. And they're looking for a certain category of people. So maybe, as I mentioned, last week, I firmly believe not everybody should go to college, and we need good trade people that can get out and go right to wherever they can learn that trade. And a lot of them come out of the military that are currently in the military who have these kind of skills. And so this is a very interesting article. So maybe it's time for some of you to look at, if you're good with your hands and good with that kind of a work, look at maybe changing over your occupation to something that is in the trade skills where you can go out and probably name your job if you want to do that as well. So good question. Do I think student loans are bearing our economy in a hole? No, but I think it's certainly bearing a number of people into a hole as well. So let's get to a couple of lines open here at 339-1140. Let's get to Randy. Randy's been patiently waiting. Randy, how you doing? Welcome to Talkin Money.
I have a question about savings bonds.
Okay.
My wife went and purchased some savings bonds for some of my nieces and nephews for Christmas.
Okay.
She bought 4 of them. $25 she spent on each of them, total of $100 for $50 savings bonds each.
Okay.
She received in the mail 28 savings bonds.
Okay.
Yeah, I don't know how, but each of them got 1, but one of them got 25 total.
And they're for what dollar amount? So does it add up to the right dollar amount?
No, it's way more than what we paid.
Interesting.
Yeah, so somebody's losing money. It's either the bank or the government. So do I go back to the bank, or do I go back to the government, or do I just keep them?
Well, they are individually, I believe they all have individual serial numbers. So the child that got 25 of them, what's the face value of what she got, of what the child got?
They were $25, $50 savings bonds.
Holy cow!
Yeah, $2,500. Or no, yeah.
Yeah, that's
my value.
Yeah, my guess is that somebody's going to come knocking on the door for those pretty soon.
Yeah. So should I save them till they do? Because if I turn them into the wrong person, I'm worried they're going to come knocking on my door, and I'll say, no, I turned them into the bank, or I turned them into the government, or something.
Yeah, and she bought them through a local bank, correct?
Right.
Yeah, I'd probably take them back to the bank, and ask them, what's going on here? I bought this and I got this, because they'll figure out a way to track them down. I don't know if they can void them out, but they'll figure out a way to track them down. I don't. For me, is it worth getting? I mean, you didn't do anything wrong, but is it worth getting into a bunch of hassle and headache over a couple $100? Probably not. But it's that's a big screw up on someone's part for sure.
If I go to the bank and they're dumb enough to do this before, I'm worried that they're dumb enough to not credit me.
Yeah, I will get. I mean, if you're going to do that, then get a receipt or a letter back from somebody saying, hey, I turned these back in on this date. Maybe take a photocopy of them and have someone give you a receipt that I turned these back in to you. And I would probably not go to the teller. I'd probably go to the branch manager and say, look, this is these came out in the mail to us, and if you're giving me a gift, well, thank you very much, I'll take them. But if you're not, then I want a receipt for returning these back in, because it's different than someone just sending you some cash and not being able to track it back. I've never heard of that, but crazier thing. Maybe it was just a disgruntled employee. It was his last day and stuffed them all in an envelope and said, I'm going to stick it to the bank here and send them to you, and you're the one that ends up with the trouble down the road. So that's interesting. But I probably go back to the bank manager and talk to him a little bit about it.
Or not.
Or not.
All right. Thanks for your
Okay, Randy. Talk to you later.
All right. Bye-bye.
That's a moral question. Do I keep the ill-gotten gains? I mean, if someone's going to mess up and give me money, make it $4 or $5 million so I can just kind of disappear. I'm not going to hang out there for $250. It's just, but I haven't heard of that. That's an interesting one. Hey, I've got a couple 3 articles here that talking about this one. I really liked. This is like I got to figure out how to get this. I got to figure out how to get this into the hands of people that are renting. So out of the U.S. News report, for the first time, at least according to this chart, I'm looking back now to 1981 through 2011. So a 20-year window. Great depiction on the chart. Average median rent in 1981 was just under $300. 1981. And the median mortgage payment was just about $600, so almost double. The cost of home ownership, we're just talking about payments now, right? Rent versus mortgage payment, was about double in 1981. And if you look at the median rent, rents have never, a median rent never in the last 20 years gone down, ever. It is a straight, steady increase from just under $300 to just almost $700 a month in median rent. This is nationwide now, okay? So it's a little more than doubled in the last 20 years, rent. Just a continual clip up. There's been some areas, right, 09 and 010 didn't quite increase as much, but it still went up. Median mortgage payments have been all over the board. Obviously, in 2005, when the market was out of its mind, it was way out of whack. But for the first time in a 20-year window, the median mortgage payment and the median rent are almost within dollars exactly equal. $700 versus $698. So for the argument that it is cheaper to rent than to own, we're talking about median prices across the nation, is becoming a non-argument now. It is now, and they're also including in there the cost of taxes and insurance. And what they don't include in there, for those of you that own a home, is the interest deduction you get to take too. They haven't factored that in there either. They're just looking at straight payments. For example, Atlanta, the median monthly mortgage payment is $539, and the average asking rent is $840. So out of the 28 nation's largest metropolitan areas, all but 5 show a home value decline, interest rate decline, and it is at least as affordable to buy as it is to own. So the hope is, and the hope was, that this would be a big spur, get people out to buy homes. You still have to qualify, and you still have to have some money to put down. Not a ton, but some. But this is a very, very good chart. I'm going to try to figure out how to get this on my Talkin Money Facebook page or on my website, because it shows a lot of the areas that are very, very affordable. But this is a good sign, with rates at a 60-year low, you can now rent and own at the same monthly cost. So which would you rather do? Obviously, if you rent and the toilet breaks down, you call the landlord. There's some other items in there, the home ownership, that we haven't discussed, obviously. And house prices are not going to go up next year or the year after. But at some point in time, they will a little bit. But you look at, what are you doing when you buy a house? You're locking in your payment. Okay? So for the first time in history, if that payment is the same as renting, what we just saw the last 20 years, rent has gradually but steadily increased. When you own a home, you're locking in that cost of ownership for as long as you stay there. So it is a hedge against inflation. We got to take one more quick break, Chris. We got one more quiz question, 339-1140, 1-800-920-1140, or you can text us the answer at 441140. This company is preparing itself to go public, a la Groupon. And the CEO, Mark Pincus, has decided he's asked certain employees to surrender their restricted shares of stock or face dismissal. So basically, they gave away stock, and they're like, oops, these people are going to get real rich here real quick if we go public. So which company, Mark Pincus is the CEO, is now trying to come back to some of his employees and get their stock back? There's a howdy-doody Christmas for you, right? Here's your stock shares. Now we want them back because we're actually going to be worth something someday. 339-1140, 1-800-920-1140, or you can text us at 441140. My name is Jeff Tarbell. This is Talkin Money. We'll be right back.